Okay, part 3, we're talking about goldsmiths and the receipts. And then this started to become kind of popular around Europe at the time. Italian banks in the Middle Ages, they would issue letters of credit as well. This would be for transactions in different cities, and so you would have a partner, say you had a bank in Florence, and say someone was going to go to Paris, you would have a partner in Paris, and you would hand the merchant this letter of credit saying it's good for X amount of gold, and the merchant could hide that in a shoe, put it into a secret hiding spot in a hat or something, and therefore you can take that over to Paris, hand it over to the partner in Paris, and the partner in Paris would honor that, and they would give you the amount of gold you needed to conduct your business in Paris. And those are very ways to transaction over just. Then was formed in 1694 to issue banknotes backed by gold or silver fund in England's France. And these banknotes, paper money, representative money, they would pay for soldiers, they would pay for armaments, ships, things like that, to finance the wars with France. In colonial America, we had many different forms of money. We couldn't use gold and silver in the colonial era because the mother country, England, followed a philosophy of mercantilism, which meant that England would keep all the gold and silver, and we would not be able to use that. And so we invented our own. We had wampum, which are beads, and that did circulate as money. Bills of credit, sort of like letters of credit, they'd be backed by future tax revenue for a state, so they would issue these. Land office notes that were backed by land, future rents. Tobacco, if you're in Virginia, you would deposit your tobacco with some kind of a warehouse, and they would issue receipts just like a goldsmith. And these IOUs backed by tobacco would circulate as money. We use Spanish coins. There's a Spanish pillar dollar, is kind of famous. The story is that if you look at the Spanish pillar dollar, it was called that because they had two pillars on the back of it. And so when accountants kept track of their transactions and say you had money come in as a Spanish pillar dollar, they would put an S in there. And so these two pillars with an S in it sort of became the dollar sign, as the story goes. When we fought the Revolutionary War, if you know your American history, we had the Articles of Confederation as our government. There was no power to raise money through taxes in the Articles. And so Continental Congress, had to fund the entire war through issuing representative money. And these were called Continental notes. Here's an example of a Continental note, $65. That's sort of a large amount. And it's kind of read the writing there, but it said that promise to pay the bearer in gold or silver at some point in the time. And so we would tend to issue more and more of these to fund the war. From 1775 to 1779, 226 million of notes were issued by the Continental Congress. States issued another $210 million of notes, mostly to pay for each state's militia. Now, if you know anything about creating too much money again, these were debased through too much creation, and the value of these things fell each and every year. By the end of the war, as it turns out, we never honored these things. Speculators would buy them up, a penny on the dollar, and they were hoping to be paid fully by the new Congress, new government. They never were, and so we never did honor our promise to pay pay back the promised amount for these Continental notes. Which is why, for a long time, people would say it's not worth a Continental. So let's look at a brief history of money and banking in the United States. First of all, I'd like you to know that in our Constitution, they made it so that states cannot create money. So no states shall enter into a treaty, alliance, or confederation, coin money, or emit bills of credit. Bills of credit are representative money, backed by gold or silver. So states cannot mint their own coins, and states cannot create their own bills of credit. That power for coining was limited to the federal government. But the U.S. Constitution gave no clear authority to the federal government to create a bank or print currency as well, which became quite controversial very soon in the young history of our country. Now, the U.S. Congress did give the federal government the authority to raise taxes, borrow money, and to mint coins. And then at the end of the list of all the enumerated powers of the federal government, enumerated meaning listed, there's this last clause known as the necessary and proper clause, which says that now Congress can make all laws which shall be necessary and proper for carrying into execution the foregoing powers, the listed powers. So it's listed they could raise taxes, they could borrow, they could mint coins. So what does the federal government need that's necessary and proper to allow them to do these things up here? And that became quite controversial almost immediately with the proposal for the first bank of the United States. So initially, we only had money created by coins minted by the U.S. Treasury, and then we had what's known as state banks. State banks are banks that are chartered by the state government, and so the new states, New York, Pennsylvania, and Massachusetts, they would start to charter state banks, and state banks would create their own money. And these would be representative money backed by gold or silver deposited into these state banks. These would be similar to the gold receipts from the goldsmiths. And the first Bank of the United States was finally created in 1791 with a 20-year charter, and this was designed to allow the federal government to carry out its listed powers of, again, taxes, to be able to borrow, to mint coins. The charter, and now this is quite controversial because if you know your American history, Alexander Hamilton, the first Secretary of the Treasury, was in favor of this. Thomas Jefferson was against it, feeling that the Constitution did not allow that. And actually, most of our constitutional questions are really what is necessary and proper. And as you know, again, the final arbitrator of that decision, whether this is necessary and proper, is the U.S. Supreme Court. So there's always a controversy about how much power the federal government should have, and a lot of people were against this Bank of the United States, and so the 20-year charter was allowed to expire, and no new charter was given. Then we went into the War of 1812 without any kind of financial institution to help us raise money. We felt that was a mistake, so we went back and did another experiment, the American people. And in 1816, they gave a new institution a 20-year charter for another Bank of the United States. These actually weren't called the first and second; they were just called the Bank of the United States. Historians have eventually called them the first bank and the second bank. Now, what these banks do, well, first of all, they were privately owned. They were owned by shareholders. They issued banknotes backed by gold and silver deposited at these banks. They were a bank for the U.S. Treasury. So the U.S. Treasury had an account with these banks, and these banks would act as the financial arm of the U.S. Treasury, and they would borrow money for the Treasury. They would help the Treasury pay its bills and so on. And the one thing that people didn't like across the country is they tested the redeemability of state banknotes. These state banks were growing in size and number, and they were growing across the country. And so what the Bank of the United States did is they sent out their employees with state banknotes to see if they would redeem them. And if they would redeem them, then they would say these are good notes to accept. And if they did not redeem them, then it would be known now that these notes are not to be accepted because the state bank is not honoring the agreement to redeem them for gold and silver. This charter was also allowed to elapse. President Andrew Jackson pulled out all the funds a few years early, U.S. Treasury funds from this bank, and so it just kind of collapsed on its own, and then the charter was not renewed. And so by 1833, we had no government oversight of banking. This is known as the era of free banking. So by this time, the country had no national bank and no national paper currency. All we had was minted coins from the U.S. Treasury and all these banknotes from the state banks, which were not given any kind of oversight from the national government, and state governments didn't really care about them either. So pretty much they could do whatever they want to do. This is pretty much as laissez-faire a banking system as you can ever imagine. And so state banks just grew, and anyone could get into this business. If you wanted to start a bank, you can just start issuing notes, take deposits, issue notes, and then if you want, you can sort of just leave at middle of night, take all the gold and silver with you, and go to the next town and set up a bank again. And so there's a lot of fraud going on. A lot of people lost their savings, as again, there's no oversight, no regulation, nothing really to enforce laws at the time. And the banks grew. By 1840, there were 901. Now, the Civil War changed things. They put us on the path to where we are today. So to pay for the war again, the United States had to increase taxes. Wasn't enough. They had to borrow, sold bonds, and then they had to start to create currency as well, issue currency. Now, the first currency was traditional representative money. They were called interest payments because the actually, not sure how that worked, but that's what they did. And then demand notes. These again were paper money backed by gold, stated by the U.S. Treasury. These came from the U.S. Treasury. So that was nothing new. The new thing came in 1862, which was known as the legal tender issue. And this was the third form of money that we're going to talk about in this chapter. And that's what I'll come back to with the next part.